What's up, everyone? It's Scotty with MoneyVest. So markets here pushing higher a little bit to start off the last week of September. And of course, we are towards the end of the third quarter, and Q4 seasonality wise is usually the best time of the month. I've done several videos on this topic. However, the yields continue to rise. The 10-year yield hitting highs of 4.5% plus obviously did not put as much pressure on equities as expected, and primarily because of the technical support level that we came down to. S&P 500 literally came down to 4,300 at 280 and bounced off of that level, and of course pushed up over 40 basis points. We're going to discuss everything you need to know about the market here today. As always, if you enjoyed, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. I would really appreciate it. And link to our Discord and Patreon is going to be down below. There is a 16% annual discount that's available for 4 more days, and there's a couple more spots available if you want to join, of course, be a part of our MoneyVest community, and we'd love to have you on board. As a member, you get access to all the alerts, all the benefits, members-only private videos, TradingView charts, tutorials, everything is going to be included. Link's going to be down below. So this right here, S&P 500, Nasdaq closes higher. Monday snapping a 4-day losing streak. Of course, last week was brutal. The week before that was also not very good. This right here was from Jay Hatfield, Chief Executive Officer at Infrastructure Capital Advisors, and he says that this performance is surprisingly strong, and I think there's really 2 reasons why the market is so unhinging. One, I think, is a technical, because there is a lot of support of the market at 4,300, the exact level that I pointed out in my previous videos, and it may not hold up, but there's support there, and then people are waiting for the right moment to get back on the AI boom trade as well. In other words, a lot of buyers sitting on the sidelines at the moment for the markets here. Now, Amazon to also invest up to $4 billion in Anthropic, a rival to ChatGPT, developer of OpenAI. So e-commerce giant Amazon said on Monday that it will invest up to $4 billion in artificial intelligence firm Anthropic and take a minority ownership position in the company. So Amazon is one of those companies that continues to reinvest capital back into the business, back into other projects, and as a result, profitability has never really been their main goal. But more recently, though, ever since Andy Jassy took over from Jeff Bezos, there's been more cost-cutting measures, and there's been a little bit more focus and shift towards profitability. So I do still believe that Amazon is one of the highest quality companies for the long term out there with respect to profitability. I'll do a more specific and more dedicated video on this company in the future. Now, Bernstein also mentioned to investors that they should take profits in pricey tech stocks such as Nvidia and these other ones. And this right here is a list of 10 stocks that they put together and 10 stocks that have had the best performance in the first half versus the second half so far. And you'll notice that, of course, Nvidia, Meta, they're both up over 100%, and second half they're barely flat, and Apple is down over 10% in the second half, up 50% in the first half, and they combined make up over 65% of the tech's total capitalization. So, I think it really comes down to the idea of there's a lot that goes into it, right? There's just not just, okay, just because they're up 100%, it's time to sell. I think it's more to do with portfolio allocation. It's more to do with your liquidity. It's more to do with your time horizon in those companies. It's more to do with whether you're trading or you're investing in those companies. There's a lot of research and understanding that goes into buying or selling a stock, right? I mean, of course, the fundamental thesis hasn't really changed for a lot of these companies. I mean, it's more or less the same from 6 months ago. The only thing that has changed is the valuation, the price to earnings multiple, the price to sales multiple, and where these companies actually trade at. So from that perspective, sure, I can see a case that why you want to trim and lower your allocation in these companies, but just for the sake of, because of the returns, it doesn't really seem like a fair idea to just sell these pricey stocks and, of course, get rid of them. Of course, if your time horizon's 10 years, 20 years, then long-term, these companies are still positioned really well to do even better. Of course, there's going to be short-term volatility. Of course, the fact that Nvidia is up 190%, it can easily in the second half of this year or early 2024 drop 25, 30, 40, 50%. That's completely normal. That's volatility in any market circumstance. But, of course, long-term is still very, very valuable. And of course, the company has a lot of value to unlock, a lot of potential, and a lot of opportunities coming their way. So that's something to keep in mind. But this right here is the entire market, of course. Amazon, Tesla, Nvidia, Apple, Google, Meta, all these pushing higher a little bit, kind of bouncing off of these levels. We got energy stocks pushing up. We had communication services, healthcare. These sectors all obviously green. And then we did have consumer defensives rotating back lower. Last week was a little bit better for value and for Dow, and not so much for tech. And this today we're just seeing a little bit of that opposite trend play out. And energy was the big leader on the day, with industrials, healthcare, technology, cyclicals all following green. And in the last 1 week, of course, everything is red, with healthcare down 1%, everything down at least 1%, if not more. And 1 month, of course, energy is the big leader with the rise in energy prices. Oil prices, they've all pushed higher and moved up. So lumber prices, volatility, oats, wheat, soybean, all pushing higher, with cotton, orange juice, coffee, cocoa, and sugar pulling back. And Bitcoin is just hovering around 26,000, and Ether just a little bit under 1,600 at the moment as well. Now, going over to the markets, we had the S&P 500 up over 40 basis points, the Nasdaq was up 45 basis points, and the Dow Jones was up about 13 basis points, so more or less flat, but back over 34,000. But the more important level to really be watching on the S&P, which was quite interesting, was look at the low for the day, 4,302, okay? I want you guys to remember that. 4,302 points was the low for the S&P 500. This is our chart. Right? This is our technical analysis chart and what we identified as a very critical area of support, not only from a higher low perspective. So we've got that higher low over here. We've got that horizontal support here, but we've also got that lower low over here. So we got confluence of 3 support levels coming together at 4,300, and guess where we bounced off of? 4,300, right? So in other words, we pretty much came down to 4,302. Our support was at 4301.99, so almost at 4302. And the buyers step in at those levels. We're still in the context of this downtrend, so I want to be very clear that we're not out of the woods yet. Just because we get a green day doesn't mean that we're out of the woods. Indeed, we have seen a very nice rally, intraday rally on the day, because if you come over to the 30-minute time frame, what you will see is that we kind of gap down, right? And then we rallied a little bit over 83 basis points. Even though we were up 40 basis points on the day, we pushed up almost 1% intraday, right? That's a big difference. So we definitely did see lots of momentum coming in, but we are still very much in the context of a downtrend. So we're not out of the woods. It can very much break down below that support of 4,300 in case things turn for the worse. But take it day by day, and right now we're seeing some buyers stepping in intraday with a very nice move to the upside. Same thing with the Nasdaq here. Take a look. I mean, this is just crazy. 13,132 was a low for the day. We have had a support. In fact, if you come down a little bit lower, because that price is slightly higher, so if you come down to that green line, we're going to be at 13,145 roughly. And look at where the buyers stepped in, like right exactly to that point. Buyers came in. Intraday, we had a very nice move to the upside, and of course closing in just over 40 basis points. So both S&P and Nasdaq showing signs of strength intraday, but on a more shorter term, broader pattern here, we're still very much in the context of a downtrend. So just want that to come across very clearly, and that is to say that yes, the markets were strong today, but we are not out of the woods, meaning that we are still very much in the context of a downtrend, making lower highs and lower lows and suggesting signs of weakness for the markets overall. So that's something to keep in mind. Futures are looking brutal right now. Is that? Yeah, I mean, 49.5% down here right now on the day. This is market open. Futures are not looking good. But yeah, that's just something to keep in mind. 13,150 support for the Nasdaq, 4,300 support for the S&P 500. Now, crude oil prices have been rotating back lower, so that's good. We are starting to see that rejection at $93, $92 a barrel. We're back under $90 a barrel right now. RSI, of course, very, very overbought, starting to roll over a little bit, and that next support is going to be down to $80, $81 per share, kind of in line with that green rectangle for crude oil. Talking about Bitcoin, hovering sideways, not really moving higher or lower, just consolidating, and support level is going to stay put roughly around 25,000. So that's going to be that level to watch, with a resistance all the way up to 28,000. We've mostly been consolidating in that range for Bitcoin for quite some time. Ether back under 1,600. Support level is going to stay put at 1,550. So this right here is going to be that level to watch, with a resistance all the way up to 1,700 for Ether. So we're seeing a lot of consolidation for Ethereum as well, very similar to what we witnessed for Bitcoin. Now, going over to the 10-year yield. Now, this is getting worrisome, guys. I actually mentioned this in our Discord earlier today, basically talking about how we need to be very, very careful with TLT and TMF. I see a lot of folks kind of very excited about TLT and TMF and the fact that it's been so low. I mean, TLT was down 2.4%. It's now under $90 per share, and TMF was even lower, of course, down over 7%, coming down to now sub $5. I'm only going to mention one thing. Just be careful. Just be careful what you are buying here, because US 10-year yield, in my opinion, has the potential to, or has the legs to test 4.6, 4.7, even as high as 5%, because there's a lot of supply. I mean, the market is literally flooded with corporate and government bonds. And as the supply continues to increase with these fiscal deficits, well, guess what? Prices are going to continue to struggle, and that's going to put the yields into a upward spiral where we continue to see more and more and more momentum. So until that normalizes and stabilizes a little bit, I think the 10-year yield has more room to go higher. And like I said, I would plan to dollar cost average into TLT and TMF, but as soon as I start to read into some of these economic indicators that are suggesting that, okay, yields have indeed topped, obviously nobody can time the top here, but at least get a sense of that, okay, yields have, pushed higher to a level where we're starting to see some weakness, some price action kind of starting to stall, and that can be an opportunity for us to look into TLT and TMF on the other side of the spectrum. But until that happens, just be careful, because yields have literally just popped from 3.3 to now 4.5%, like rallied over 37%. And this entire time, I've been very, very vocal about being patient and just, not being aggressive. These macro tactical plays require a lot of patience. You need for these trends to play out over time. And as a result, we'll make our decisions when the time comes. But until then, just be careful. I mean, 5% is a possibility, and that's going to put a lot of pressure on equities. Right now, it's not being witnessed, but that's because we're out of technical support and buyers stepped in. But of course, that correlation can once again start to play in, where yields continue to go higher, put a lot of downward pressure on equities, which is not going to be good, because this is a huge breakout for our 10-year yields past 4.5%. We are now trading at the same level as we were back in 2007, June, August of 2007, literally right before the global financial crisis. We were right there before, of course, everything just hit the fan. But next resistance, or basically the next level and targets, are going to be at closer to 5.1%. There may be some level to watch at 4.8, 4.9, but that 5% is going to be that next key psychological level for the yields moving forward. So keep a close eye on that. Talking a little bit about Apple first now, and Apple here also getting bounced off of that support at 174, 172. So this right here is going to be that support at 172, and of course intraday buyers stepping in back over 176, so up over 74 basis points. Again, still in the context of this downtrend, we're very much making lower highs and lower lows, something to keep in mind. Amazon here on the other hand, was up 1.67%. Pushing back higher. We do have a little bit of a gap to fill, so this right here is going to be that gap that Amazon has to fill here after it gapped down pretty aggressively. And of course, we've got that next support, very, very important level, sitting roughly at around 126, 127, in line with this lower low, and also in line with this horizontal support for Amazon as well. And right now, we're kind of hovering around 130s for Amazon at the moment. Talking about Tesla. And Tesla here also, take a look, getting bought up from that exact 240 level. In fact, actually, we came down to 238. So we were off by a couple dollars, but you can start to see like this is the exact circle, right, that we pointed to. And of course, buyers stepping in from that support, and of course, lots of momentum coming back in. So very, very important level. This is going to be that higher low and that horizontal support. That's exactly why 240 is such a critical level for Tesla. And of course, we're getting bought up from that level. But nonetheless, that is going to be that support. In case we break down below this, next support is going to be down to $212, $210 inside this green rectangle that I've marked in my previous video. So that's going to be that next support, and that's also going to be in line with this lower low for Tesla if we continue to trade inside this downtrending channel. But right now, as it seems like we are seeing some buyers to step in at that support at 240, and Tesla had a pretty decent day, up over 86 basis points. Talking about PayPal, and PayPal here on the day continues to sell off, obviously, but moving higher on the day on that support of around $57, $58. So this right here was a momentum back up. And again, you can see the low for the day, 57.51. Our support was 57.47. Man, what is going on today? So many of them are so close. They're off by decimals here. That's what we're talking, like literally off by pennies, and they're bouncing off of that support so well. Like it's crazy. And of course, PayPal here intraday pushing higher very, very nicely. So intraday, we actually did see a rally of 2.5%. for PayPal, lots of buyers stepping in at that support. But again, I want to point out, just because we bounce off of that support doesn't mean we're due for a reversal now. If anything, it does show signs of weakness. So if we do end up breaking down below 57, then we'll mark our next support. But we've got that level right now to watch. Resistance all the way up to this sort of a rectangle, and the gap that we need to fill all the way up to $69 to $70 per share for PayPal. Talking about Square, and Square here, $42, $43 is going to be that next support. We didn't quite come down all the way to that level. Low for the day was only 44 bucks. Very, very oversold on the RSI and the MACD. So we're seeing some buyers step back in. Resistance is going to be all the way to $49 to $50 per share. And of course, this right here is the range, the red rectangle, the range where there is a lot of supply. For Square at the moment, there is going to be a lot of resistance at those prices. Talking a little bit about Nvidia now. Nvidia did come down to low 400s. It came down to as low as $411, and last week it came down to as low as $410, $9 per share was a low for the day. But of course, getting bought up here after the RSI being a little bit more on the oversold side. Same with the MACD. So this is a triple bottom support with some negative divergence, which obviously resulted in Nvidia selling off over 18-20%. And right now we're seeing some buyers to step back in. So support level is going to stay put at low 400, so $401 to be precise. Resistance all the way up to 500 bucks. That's pretty much the all-time high. And right now we are still very much in the context of this pattern or this range within which it's been trading, right? So lots of consolidation sideways in between that, in between those two prices. Advanced Micro Devices also seeing a lot of buyers stepping in at this lower low. So if you come back over to this chart, you'll notice, you know, this right here is the breakdown from this downtrending channel, and of course from that horizontal support of 100 bucks. I do believe that AMD might be pushing back higher to kind of retest that old support as a resistance now, and I wouldn't be surprised if we do get rejected here and then make our way potentially down to the 80s or even lower. That's obviously going to be ideal and very, very good deals for AMD. So those are going to be some support levels to watch at 80 bucks, and right now resistance stays put at close to about $100 per share for Advanced Micro Devices. Talking about Meta Platforms, and Meta here also pushing higher, up over 0.5%, back over to 300 bucks. This right here is still very much in the context of a downtrend, making lower highs and lower lows, something to keep in mind. So this right here, lower highs, lower lows, and of course a very important support level sitting roughly at around $276 per share for Meta. So that's going to be that downtrending channel within which it's been trading at. Netflix, on the other hand, getting some buyers to step in, 1.3% higher on the day. This right here is going to be that support that we marked for Netflix at around 380 bucks. And guess what? The low for the day was $380.81. I do believe that it's got a lot of potential now, considering the sell-off has been a bit more overblown, in my opinion. And RSI MACD very, very oversold. We got a resistance sitting roughly at $398, close to $400, all the way up to as much as $452. I don't expect Netflix to retrace back up to that level anytime soon, but there is still opportunity for us to capitalize on if it does trade back up at 415s, 420s with a very nice support sitting in the 380s. So low risk, high potential reward opportunity here for Netflix, which again, I will mention in our Discord if there is a potential swing trade for this company. Talking about Google now, and Google here did break down from this sort of rising wedge pattern. We did break down below 132 as well, although of course getting bought up here. RSI not quite oversold, and MACD also quite reasonably priced here. 127 is going to be that very important support level next, and right now 132 is going to be a resistance to watch for Google at the moment. So that's going to be a resistance. Support level stays put at 127 for Google moving forward. Talking a little bit about Microsoft, and Microsoft here also getting bought up from that support of 313, 314. So again, low for the day was 315 right on the dot. And again, buyers stepping in here. And like I said, we're still in the context of a downtrend. So lower highs and lower lows. But of course, we're seeing a bit of a horizontal support, getting buyers to step in at around $314 per share. In case we see a breakdown below this level, of course, next lower low is going to be down here at $292, roughly sub $300 per share. And finally, we got Shopify and Enphase, and Shopify here also getting some buyers to step in, intraday up almost 1%. Resistance is going to be over here now, sitting roughly at around $54 per share, with a gap to fill down below, sitting roughly at $48 to $51 for Shopify. And finally, we got Enphase just consolidating sideways, up almost 1%, but lots of accumulation happening, in my opinion, at these good deal levels for Enphase. And right now, we're literally just trading sideways at the moment, kind of rounding out on the RSI and the MACD. And there does seem to be a little bit of that bullish divergence for the RSI and the MACD as well. Resistance is going to stay put at 128 for end phase. So bottom line is, we did see a lot of buyers stepping in intraday, but that shouldn't take your eye off of the overall trend. And the overall trend is that we are very much still in the context of a downtrend, making lower highs and lower lows. So that's something to keep in mind. And the futures right now don't look very good. We've got a lot of economic data coming out later this week with some earnings as well. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. I would really appreciate it. And links to our Discord and Patreon is going to be down below if you're interested in joining. And of course, getting access to all the buy and sell alerts, options alerts, trade ideas, everything's going to be included with that 16% annual discount as well. As always, happy investing. I'll see you all in the next video.